Taking a dual stance, US Secretary of State Marco Rubio has acknowledged that imposing secondary sanctions on China for refining Russian oil could drive up global energy prices, even as Washington has punished India with additional tariffs for continuing to purchase crude from Moscow. Rubio cautioned that targeting Chinese refiners would have disruptive consequences for the global oil market. He said that imposing secondary sanctions on a country, as in the case of Russian oil shipments to China, it will simply refine that oil and it will return to the global market. Anyone buying this oil will pay a higher price, or if it is unavailable, they will have to look for alternative sources. Rubio revealed that European nations have already expressed unease over such measures. His comments came after he had earlier stressed that India's energy trade with Moscow had long been a sore spot in Washington. Yet while the US has refrained from sanctioning China, Washington has moved aggressively against India. After first imposing a 25% tariff on Indian goods, President Donald Trump recently doubled the duty to 50%, penalizing New Delhi for persisting with Russian oil imports. The White House also warned India that secondary sanctions could follow if it did not alter its course. The move has sparked accusations of double standards, with critics pointing out that China continues to import large volumes of Russian oil without facing similar punitive measures. Despite Trump's repeated threats, India has maintained there has been no pause in its Russian oil purchases and accused Washington of hypocrisy. The debate over sanctions comes against the backdrop of Trump's high-profile meeting with Russian President Vladimir Putin in Alaska. Although the summit did not yield a breakthrough on a ceasefire in Ukraine, Trump described the talks as productive, calling them a 10 on 10. With that, US Secretary of State defends Russian oil hypocrisy.